What's going on, everyone? Welcome back to part 4 of the Jericho software tutorial. In today's video, we're going to be looking at the cash versus creative tab, which is going to be housing all of the manual underwriting needed for your cash and creative finance offers. And so today's video, we're going to be diving into all the inputs and new features seen in the Jericho 3.0. And later in this video series, we're going to do a masterclass using the Jericho software. That masterclass is going to be dedicated to subject to underwriting, seller finance underwriting, and hybrid underwriting as well. So let's begin. We're going to do a basic walkthrough of all these input variables that you see here on your screen. Make sure you're clicked on the correct tab. So we're going to be on the cash versus creative tab. And the first thing that you'll notice on this spreadsheet is that there's going to be 3 distinctive calculators meant for 3 distinctive acquisitions. So we have a calculator here, which is also in the representation of a table. It has a dual functionality. This section here is going to be used for your subject to underwriting. You have another calculator here meant for seller finance underwriting. And then the calculator below it is going to be meant for hybrid underwriting. And you'll also notice here something very special. Both the hybrid and the seller finance calculators have a new macro included. And this macro is going to auto-calculate the maximum monthly payment that the seller can receive based off of a cash-on-cash target. So this is a brand new feature for the Jericho software. I don't know any other underwriting software available in the public domain that will do this for you. So you'll have the option during the manual underwriting to actually adjust the interest rate percentage yourself, or you could have the macro do it for you, and it'll automatically try to figure out what is the maximum monthly payment that the seller can receive for a seller finance transaction, as well as for a hybrid transaction. Later in this video, we'll go into that a little bit further. The first thing that I do want to show you is that all 3 calculators are going to be linked to 3 separate LOI templates. So on the bottom of your screen, you'll see a subject to template. You'll see a hybrid template, and you'll see a seller finance template. And so the mathematics that are being run in the cash versus creative, those input variables that are being generated from this spreadsheet, they're automatically going to get just transcribed and moved over into the appropriate LOI template of which you will be sending out an offer to the seller for. So that's just something to keep in mind. And so, for example, the subject to calculator, every calculation that's used for the subject to calculator will automatically get transcribed into the subject to LOI template. And then if we go back to the cash versus creative tab, every calculation seen in the seller finance calculator will also be noticeable in the seller finance template. And so the same would be said for the hybrid calculations as well. So all this is being done in an automated way to speedline the process for creating an offer to a seller, but then also creating a professional LOI that can be sent out either through a manual email or through a blasting of emails, which we had seen in part 3 of this video series. If we go back to the top portion here of the screen, you'll notice that the subject to calculator is in the shape of a table. The reason why it's in the shape of a table is because this table is seen in the subject to hybrid and seller finance templates, and it's done on purpose because we want to provide a visual representation to the seller when they receive both of our offers for cash and creative finance. We want the seller to see what they will net at closing for a cash offer and what they will net at closing for a creative offer. So that table has a dual functionality. You can do your subject to transactions using this portion of the calculator, but it'll also be for a visual representation for the seller as well. Every cell here that is highlighted in yellow is the cell that you want to be working with. So we have a key here. The key is found in column A, row 9. Every cell that's highlighted in yellow, these are the cells that you want to be working with, or these are the main cells that are going to have an impact on the underwriting process for your creative finance offers. If I move myself back to the left-hand portion of your screen, you'll also notice something here called the estimated deal projection. The estimated deal projection is essentially going to be a stress test meant for hybrid and seller finance transactions. the seller finance and hybrid transactions, they normally take quite a bit of time during the underwriting process, and so instead of spending 5 or 10 minutes for an underwriting process that may or may not result in a positive result where you can actually incentivize the seller to take your creative finance offer, or even if it'll cash flow, we're doing a stress test before we do a full underwriting. And the stress test is going to be a pretty good indication. It's just going to be an estimate, but it'll be a solid estimate of whether or not your property is going to cash flow as a hybrid or seller finance transaction. And so as long as the cash flow here, seen in column L, row 9, as long as that cash flow is greater than $200, then you could have a pretty good level of confidence yourself as a user that when you do proceed to a manual underwriting for seller finance or hybrid underwriting, then that property more than likely will cash flow because it had passed the stress test. And you'll also notice here that right above the stress test, you'll see something here called approximate cash on cash percentage. It is what the name implies. It's simply going to be an estimate. The main value that we're really looking for is, does the property cash flow even after I'm giving a monthly payment to the seller? So this is going to be your stress test. It'll be your little helper before you start your full underwriting process. You'll notice here too that in column K, I believe that's column K, row 4. Column K, row 4 is going to have your rental value, and that rental value is going to be connected to both the seller finance and the hybrid calculations. The rental value is not needed in subject to transactions because we're giving all the equity up front to the seller during a subject to transaction. So the rental value does not apply for the mathematics during the underwriting process for subject to. But this rental value will be useful, and this is the rental value that you would then input. You can find it off of Zillow, Redfin, PropStream. You can comp out rental properties in the local neighborhood, and you would simply input that rental value here in that cell once you have a pretty good estimate of what you think the property would rent out for. And so then that rental value would then be used for the seller finance and the hybrid transactions seen below. So I'm going to move myself over back to the right-hand portion. A lot of this information here, we're going to cover in our masterclass for subject to. I think it would be better to break this down further for the subject to masterclass for underwriting. Everything, though, is pretty self-explanatory. Just input all the necessary information in the cells that are highlighted in yellow. For example, here it says sales fee. So the sales fee would just be the commission costs or the closing costs combined. So combine both of those costs, and that would be your approximate sales fee. I've got a couple of videos here on the channel describing what sales fee is. Your encumbrance, you'll find that off of PropStream. That would be your total mortgage balance and total lien balance as well. So that would be the encumbrance. And then you have an option here for tax rates. If you want to include the tax rates for the seller when they have received your net proceeds at closing, you have the option to select what the tax rate percentage would be. Again, we can cover that in further detail in our masterclass for underwriting. But it's an option here. It's an input variation that you can choose from should you choose to use it during your LOI templates that are being sent out to your seller. We also have a cell here. That cell here is in G4. G4 is basically telling you as a user, as the underwriter, that if you do agree to overpay for the property, this is the amount that you are agreeing to overpay. So in this example here, we have a current market value of $285 with a purchase price of $310. So this $25,000 is saying that I am agreeing to pay the seller $25,000 over the current market value. And so that is why the creative purchase price is $310. And if we click on that cell in column F, row 3, we can see the formula. Every cell here on this spreadsheet will have the formulas. So as long as that cell is, working with a formula or working in coordination with a different cell on the spreadsheet, you will see that formula present. Just simply click on the cell itself and you'll be able to follow along with the mathematics. So let's move on down to the seller finance portion of the calculator. Something here that I think a lot of you are going to like is that instead of having to manually adjust the interest rate, which would then control the monthly payment that the seller would receive for a seller finance transaction, I can simply state to the macro involved that if I do decide to have a target cash on cash of, let's say, 15%, then the macro here highlighted in orange is going to calculate the maximum monthly payment to the seller based off of your target cash on cash of 15%. You saw this functionality in part 2 of this video series, and now we have implemented it here on the cash versus creative tab as well. It'll just speed the process along for you during underwriting. So if we do have, for example, a cash on cash target of 15% with a rental value of $3,000, when we click the macro, we run the macro, you're going to see that it had adjusted the interest rate to 5.94%. And so this would be the maximum monthly payment to the seller, so that you, as the investor, would receive a 15% cash on cash return on your capital. How is the cash on cash return being calculated? Well, you simply go to the yearly cash flow cell, which is highlighted. As of right now, it's highlighted, but it's found in column J, row 24, and you will see the formula. And so you can follow the formula and you'll see how the cash on cash is being calculated. And this is a very easy way to manually underwrite your deals based off of the cash on cash percentage. The macro will do the math for you. Again, you have the option to adjust the interest rate however you want. You can adjust the term length in years to however you like. We will do a full masterclass underwriting for seller finance transactions using the Jericho software, but this feature is available to you should you choose it. And then moving down, the same functionality is seen here for the hybrid calculation as well, or the hybrid transaction. We can auto-calculate the monthly payment as well. So as of right now, we have a cash on cash of 20.61% based off of the current mathematics seen on your screen. If we click the auto-calculate monthly payment, did it change? Oh, it did change. It changed to $395 as the monthly payment to the seller. It's been a long day. I'm recording these videos pretty late in the evening, but it did change the monthly payment. So the monthly payment now is $395. The $395 is the monthly payment the seller would receive as a principal-only payment, no interest. And so you have the ability to come on in here and just change the monthly payment to whatever you would like, or you can run the macro and it'll run the calculation for you based off of the target cash on cash percentage. So that should help speed along the process. Again, as I said before, everything that is highlighted in yellow are the cells that you want to be have control over and have input variables for. And then what's seen here in blue is essentially the final result of your calculation. So what's highlighted in blue is the final result of your underwriting. And then if we just scroll on over to the right-hand side, you'll see that the seller finance calculator also has its own unique table. It has an amortization schedule included, and the hybrid calculator also has its own unique graph as well, but no amortization schedule is needed for this portion of the calculator since we're doing principal-only payments. The reason why we're doing principal-only payments will be revealed to you in the master class for the hybrid underwriting using the Jericho software. So I think that's pretty much it. I think that covers up almost everything in the cash versus creative section here for the manual underwriting. You'll see a little bit of information here as a bonus for the long-term capital gains rate and the short-term capital gains rate. You can refer to this at will should you have any questions about taxes for a certain property. That information is provided for you for the federal tax year of 2023. But that should be everything. That covers pretty much everything that I wanted to discuss for the cash versus creative tab. Later in this video series, we'll do a masterclass, more in-depth analysis of which variables I would adjust according to the acquisition type. But I hope this was helpful. If you have any specific questions, leave a comment in the video description below. And in the next video, we are going to go over the subject to hybrid and seller finance templates. That will be in the next video of this series. So thank you for watching, and I'll see you on the next video. Take care.